Hey everyone, welcome back to Corporate Decoder. Today we're cracking open Mercer Bancorp's latest filing, and let me tell you, it's a bit like that time I tried baking a cake following a recipe from 1750. Spoiler alert, things get a little messy, especially when we talk about accounting before we dive in. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for even more insights. Scroll changes in registrants certifying CATs. Canton Accountant Scroll, the big news in this filing is that Mercer Bancorp changed their accounting firm. They fired their old one, SR Snodgrass PC, and hired a new one, Clark, Schaefer, Hackett & Co. Cease for short. It's like switching doctors. You want someone who you feel is giving you great advice, even if you are getting pretty good advice to begin with. According to the filing Mercer Bancorp's audit committee, the board of directors decided to dismiss Snodgrass on June 17, 2025. The company management informed Snodgrass on that date. Now, the company says that Snodgrass's audit reports for the last 2 years, that's 2024 and 2023, didn't have any major problems like a bad opinion or a disclaimer. Also, they say there weren't any big disagreements with Snodgrass about how they were doing their accounting or showing things in their financial statements. However, they do mention 2 reportable events. These are things that the company has to tell the SEC about. It can be seen like problems with their accounting or internal controls. The first one involves accidentally messing up some financial reporting about unpaid expenses from 2023. Basically, they didn't properly track some bills they had received but hadn't paid yet. This led to a material weakness, which means their internal controls weren't good enough to make sure their financial statements were correct. Think of it like leaving the door unlocked at night, not good. To fix this, the company had to restate their past financial statements, which is like having to redo a test because you messed up the first time. The company claims that they fixed these issues, including implementing procedures to ensure the monthly collection, payment, and accruals of all professional expenses, strengthening its internal control. The second reportable event has to do with the audit of their financial statements for the year ending September 30, 2024, which revealed a pair of material weaknesses. First, they didn't have good enough controls over the allowance for credit losses on loans. This is like not having a good system for figuring out how much money they might lose if people don't pay back their loans. The completeness and accuracy of qualitative factors were not great, and that has an impact. They clarified that this didn't actually change the amount they set aside for potential loan losses, which is important. The second weakness was in how they review accrued expenses. This means they did not have solid controls over preparing and reviewing accrued expenses, and the result was that accruals were improperly recognized, leading to inaccurate accrual balances. Think of accruals as the financial version of IOUs, and the company needed a better way of managing them. As a result, the management team determined that the disclosure controls and procedures were not effective as of September 30, 2024 and December 31, 2024. This is not great. It means reporting was not great. The numbers were not great. Also, they claim that they have strengthened internal control over financial reporting, and their disclosure controls and procedures were effective as of March 31, 2025. Before filing this report with the SEC, Mercer Bancorp gave Snodgrass a chance to look over the information about their dismissal and the reportable events. Snodgrass then wrote a letter to the SEC to say whether or not they agreed with the information in this report. That letter is included as an exhibit to this report, which basically provides a second opinion on this matter from the people they fired. On June 17, 2025, Mercer Bancorp hired Schaefer, Hackett & Co., that's CSH, the new accounting firm, to be their independent registered public accounting firm for the fiscal year ending September 30th, 2025. In other words, it's their new financial cop for that year. According to the filing before hiring CSH, the company didn't talk to them about any tricky accounting issues or ask them what kind of audit opinion they might give on their financial statements. They also say that there were no disagreements or reportable events discussed with CSH. This part is basically stating that the company picked CSH with a clean slate. Finally, the filing includes the exhibit letter from SR Snodgrass PC, dated June 2025, which supports the information provided. Now let's step back and consider the bigger picture. The issues Mercer Bancorp faced weren't necessarily doomsday scenarios, but they do reveal internal challenges. The material weaknesses identified in their internal controls suggest a need for more robust oversight processes. Switching accounting firms can also be viewed through different lenses. On one hand, it introduces fresh perspectives and potentially improved place comment necessarily in the first place, a new raw audit quality. On the other hand, it raises the question of why the change was necessary in the first place. Scroll implement controls that Clita believes remediated. Scroll, the company is actively implementing controls it believes fixes prior weaknesses. The key is how well Mercer Bancorp can actually fix the issues they had with accurately reporting income and the efficiency of those processes. Alright, that's our breakdown of Mercer Bancorp's latest filing. What's your take on these changes and what they signal for the company's future? Drop your thoughts in the comments, and if this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for even more insights. Thanks for watching. See you next time.